everybody, it's Kevin from NorthStarBadCharts.com, and I'm recording this on the last day of 2021. So Happy New Year to everybody if you're watching this in 2022. And what I want to do here is just go through the way that we do, or I do, technical analysis, why it helps and why it works. So I'm going to stop sharing my my video. I'll switch the video off. And I'll just talk you through how the technical analysis has been working and the way that we use it. So this this image here you see on the left-hand side is the chart that I put out back in January of 2020 on Twitter and perhaps various other places as well. And I was tracking cryptocurrencies at the time, and this was Ethereum on the 30th of January 2020, so pretty much 2 years ago. And you can see that I've analysed a symmetrical triangle with a developing arc which was just about to break out. So at that point I was very bullish on Ethereum and cryptos generally. I was doing similar charts for Bitcoin, and by using this technical analysis of combinations of bullish pennants, bullish flags, or bullish symmetrical triangles, and combining them with arc basing formations that take place over a period of years, you can then begin to bring the evidence together that we're going to see a significant breakout. And by combining it with technical indicators to support that as well, you can make a scientific conclusion that the odds, the probabilities are in favor of an upside breakout, which at this point would have been particularly significant after such a period of pullback and sort of price pullbacks and consolidations. Okay, so that was the prediction. Of course, it went on to make the breakout, and that's where I called the cryptocurrency bull market as starting. I think Bitcoin was somewhere down near $9,000 or thereabouts at the time. I have to check my charts to double check, but I think it was down around about $9,000. That's where I personally was saying to everybody that it's a bull market, and you get in now, and you kind of just follow the technical analysis and make your decisions as time goes by. But there's some ridiculous comments on social media just recently about what do you do if the arc breaks down? Do you just redraw the arc? Ha ha ha, and all that kind of stuff, which is just childish, really. And that's the reason why I'm doing this video, is to explain why that's childish. So so that was the forecast, that was the roadmap, and that was my prediction. And I'll just get rid of that, and we'll now look at the chart here. And this is where we were at that point in 2020, with price somewhere around about $170. And I'm just going to highlight the patterns that I was following at the time. So if I just do this, you can see the arc that we saw on the previous chart, and you can see the breakout line that was there on the previous chart. Okay, so I was at the point here of calling a breakout. Price broke out, came back, and at this point here, when we came back down below the this breakout line, people were saying, oh, your forecast is wrong and you're going to have to redraw it and all that kind of stuff. Well, it's not true at all, because all it was a back test, and then price went on to break out and get back above the 30-week moving average, which is this green line here. That's the 30-week moving average. So price then began to move up, and all of my forecasts came to fruition, of course. And you can see how the arc completed beautifully when price got above sort of $1,500. It reached its target exactly on time, exactly as predicted, and the price then went on and moved up to $4,000. Now, from a technical analysis point of view, all you have to do once you're above the 30-week moving average and in an uptrend is to ride the move up, stay in the trade. Now you have to get in at the low risk, high reward entry point. There's no point getting in up here somewhere, because you're in a higher risk position. And this is where people start panicking and start getting, angry with you on social media and Twitter, because they were too late to get in. They got in up here, so every little pullback is going to put them in in a position where you're perhaps making a loss. This is the low risk, high reward entry point. This is where I called the crypto bull market breakout. So that's what you should have got in, somewhere down there, well, certainly less than $200. Okay. Everybody else who got in higher up, well, that's not really my fault. At this point, all I'm doing is following the move up. The important point, and this is on NorthStarBadCharts.com, this is why we are showing new charts, new forecasts now that are in this position, the low risk, high reward position. Okay, so the whole point is to get a trade initiated at this point here, and that's what we're focusing on. Once it gets up here somewhere, you're then in a more risky position, and I'll explain why. Because at this point you have other chart patterns that come into play, and one of them at the moment is this arc, or inverted arc, and this support line. And unfortunately, Ethereum has moved below the support line. It's not necessarily the end of things, though, because we are in a what looks as though it could be a bullish descending channel or wedge pattern. So if price breaks above this $4,000 area, and certainly if it remains above the 30-week moving average, then I'm not particularly concerned. Personally, the warning bells will go off for me if we go below the 30-week moving average, and that would be my exit my exit signal. Having got in all the way down here, albeit with a relatively small position, I wish I'd gone in with a higher position, but never mind. It's done very nicely, and my positions in Bitcoin and Litecoin as well. So the point is to get in down here, trust the technical analysis at this point, and then when you get into this position up here, you're in a very good position. You can wait until the breakout happens, and you're absolutely sure it's broken down, and you can still exit with 1,000% profit or more. So yes, you do. And to answer the questions on Twitter, of course, yes, you do adjust things as evidence comes in. You don't just stick with a forecast. If I'd drawn the arc in here, for example, the price was going up here. This looks like a breakdown, doesn't it? But it's not a breakdown. It's just that the arc needs to be drawn in this position. It doesn't mean the point is that the arc is in existence because of these touch points here. You've got one here, you've got another one here, another one here, another touch point here. So that tells you that the arc is there, but there's a variety of possible positions. It doesn't fundamentally change the fact that you need to take your position in the instrument in Ethereum in this area down here. It doesn't matter whether the arc was initially drawn here or whether you reassess it with the new evidence and draw it in that position, which is what I always do. You can't ignore all the incoming evidence. It's like doing a weather forecast for a hurricane. You don't listen to a weather forecast for a hurricane 10 days before it hits, and then go to the forecaster after 5 days and say, oh, you got it completely wrong because the hurricane's taking a slightly different track. That's crackers, because you have to take all the scientific evidence into account all of the time. And so if a hurricane starts to change course, then a scientist will be monitoring that with satellite imagery and radar imagery and all the rest of it. And you have to constantly take into account everything that's going on at that point in time. You don't just ignore reality. That's not how science works. And if you think that's how science works, then you don't understand science, and you pretty much don't understand how the world around you works. It just shows your sort of naivety. So it's never a case of just getting it wrong and constantly adjusting charts for the sake of it. It's a scientific process, and if you don't understand that, then you shouldn't really be investing in the first place, because you don't know what you're doing. So that's all I wanted to say. Ethereum at the moment, as I say, is in a pullback situation. Nothing critical is broken here. Not until we get below the 30-week moving average would I start worrying. If we get below the 30-week moving average, then I'll have some concerns. But Bitcoin is looking constructive at the moment as well. So So that's how the technical analysis works. Arcs and domes, they're just support and resistance lines like any other support and resistance line, and price reacts on those support and resistance lines. That's what they're there for, and they're, you know, they tell us when something significant is happening. Just because you've got a support line, whether it's an arc or a straight line like this, doesn't mean that price can't go below it. It doesn't mean that you've got something wrong if it does cross that line. It just means that the price is telling you something significant is happening if you cross that line. Okay, that's it from me for now. I just want to wish you all a great 2022, and I hope all your investing and your trading goes really, really well. And myself and Patrick will do our best to keep you on top of things on Twitter from a general point of view, but much more specifically with stocks and shares and cryptos, the uranium sector, commodities, gold, silver, base metals, pretty much anything you can shake a stick at, the stock market, currencies, all that kind of thing on our website, northstarbarcharts.com. will be analysed through the course of the year, and I'm sure there'll be lots of fun and games along the way. So that's it, everybody. That's a wrap, and speak to you again in the new year. Bye for now.